It's been another interesting day in markets, and it's going to be interesting as the day progresses. Not everyone's back from holidays yet, and that's a good thing because it gives the rest of us quite an opportunity. Look, there's a few interesting themes running through the market. One of those has been Queensland floods mean the Australian dollar is going to be soft. I think that's a load of nonsense myself. Sure, some coal mines are going to be shut down for 1 or 2 months, but they'll come back online and they'll catch up to their orders with time. But generally, we weren't bullish the Australian dollar on the basis of bananas and fruits in Queensland in the first place. We're bullish the Australian dollar based on the high commodity demand coming out of Asia and for that matter, the rest of the world. And we're also bullish the Aussie dollar because we think that one of the reasons the US economy is recovering is because the US dollar has been a little softer. It's helping their export sector. But clearly on the services side in the US, we had really good data yesterday, 57.1 for the ISM Services Index. That's a really good high number. If you remember, the previous number was a little bit lower and people were saying they thought it was a bit soft. At the time, I was saying it's not a soft number at all. We're really up in the band where the ISM was in 2006, 2007. Where we had very strong economic growth in the US. And they're the sorts of numbers we're getting across a wide range of data series in the US at the moment. The US is firmly on a recovery path. In fact, I wouldn't say it's recovering anymore. It's becoming a boom, strong economy again. We might even have economic boom by the end of the year, but certainly we're going to see very strong growth numbers for the US as the year goes on. I've always said it's about the 90% of people who have their jobs. It's not about the unemployed. You're going to have a strong recovery, strong economic growth period in the US with high unemployment. It's going to be based on a weaker US dollar, generating export sector, and it's going to be based on the 90% of people who have jobs realizing that they actually have job security, realizing that they can actually start to push for higher wages and becoming confident again about going out there and spending. So that's why you're going to see these strong consumption numbers coming through and good ISM services activity, and you'll see ISM manufacturing pick up as well. It's not such a rosy situation in Australia because the Reserve Bank hiked rates too much. They're already highly restrictive. They've gone too far, too fast. The floods in Queensland, if anything, mean that a rate hike in Australia is completely off the books until the middle of the year, probably well into the third quarter. We might only see 25-point rate hike this year. Of course, that's good news for equity markets because our equity markets really, particularly obviously the resource stocks, are about that demand in Asia. Look, it doesn't matter if China slows down, has zero growth. Our resource companies, our mining companies are still going to have trouble keeping up with that demand just on zero growth out of China. Probability, very low. What's most likely? China's going to be booming 9, 10, 11% again this year. That's going to see really our resource sector struggling to keep up with demand. So the outlook for the Australian dollar, for instance, rather than being bearish about some floods in Queensland, and they are tragic, but rather than being bearish about the floods, just see this dip as an opportunity to buy. Feel very strongly in the same way about the equity market. We've been very bullish, still are. It's still a buy the dip scenario. In fact, while everyone else is still on holidays, those of us who are already back can really look at the market at the moment and say, thank you for all this pessimistic news and commentary of the last few days. It's given us good levels to buy for what's probably going to be a very strong year. So looking through all of that, there's a couple of stocks standing out with very nice price action. They include Macquarie Bank and also Fortescue, BHP, Rio, yes, but there's certainly something in the Fortescue price action and the Macquarie Bank price action to suggest that some big global funds, if you like, are starting to take an interest again in those stocks. So I'd be very bullish those companies from here and similar stories. Also, some of the dreadful pennies, so to speak, in the resource sector, they're probably going to come on strong as well by the end of the week. In the ASX 200, around this 4,700 area, strong support. We could see a dip down to say 4,650, worst case scenario, but you should be loading up, I think, in these sorts of levels now. Everything can be summed up then as we're off to a great start in that we've been given a pullback, a gift if you like, opportunity to go long for what's going to be a great rest of 2011.